All right, thank you, Angelica. Hello and welcome to our webinar. Today, we'll cover the next steps in the payments improvement journey. I'm Jean Rourke with the Federal Reserve, and I'll be your facilitator. Let me be the first to welcome our presenters today. They are Dave Saponaro and Connie Thine. Dave Saponaro is First Vice President and Chief Operating Officer at the St. Louis Fed. Dave is also our Federal Reserve System Payments Strategy Director. Connie Thine is Senior Vice President and Director of Payments Industry Relations for the Federal Reserve System. If you haven't joined us through the webinar yet, click on the link you received after registering. For the best webinar experience, use the FAQ document, which can be found using the Materials button in the webinar player page. I'll highlight a few important notes for you. You can listen to the audio through your PC speakers or through the phone. If you use the phone option, slides will not sync with audio unless you change your settings. You can do this by selecting the gray gear located on the upper right corner of the slide window just above the presentation. From there, you should see a few options in the media chooser. You should select the phone option if you're listening through the phone. You can expand the size of your slides. To do this, use the Maximize button in the upper right corner of the slide window located on the webinar player page. If you'd like a PDF version of today's presentation, you can access it using the Materials button. And we will be taking questions at the end of our presentation, but you can send them in at any time during our call. If you've joined us via webinar, just click the Ask Question button, and we'll get your questions queued up for our presenters today. And with all of that out of the way, let me welcome our first presenter, Dave Saponaro.
Okay, great. Thank you, Jean, and welcome everyone, and good morning. Thank you for joining us at this Fed Forum to hear about our recently released paper, Strategies for Improving the Payment System, Next Steps in the Payment Improvement Journey. Over the next hour or so, Connie and I will walk through the slide deck, and our hope is that at the end of this session, you'll have a high-level understanding of the progress that has been made in our payment system improvement efforts over the last couple of years, as well as an understanding of what the Fed's going to do over the next couple of years. Please feel free to use the online tool to submit your questions as we go along, and at the end we will try to answer as many of those as we can. So we can move to slide 2. I wanted to start off today by really setting the context for the remainder of the more detailed presentation, and really starting at the highest level with, as the nation's central bank, why does the Fed even involve itself with the payment system? And there's really a very concise and direct answer to that, and it goes back to the overall goals of the Federal Reserve System, which are to promote economic growth and financial stability of our $19 trillion economy and growing. Our engagement in the payment system and in its evolution is one of the key roles we play as an organization. It doesn't often get the attention that some of our other roles get, such as our monetary policy role or our banking supervision role, but nonetheless, involvement in payments evolution is a key role that we take very seriously. And indeed, if you think about it, everyone in the country should appreciate and understand that we need a sound payment system to have a strong economy. According to our latest figures, in 2015, consumers, businesses, and government agencies executed 144 billion, that's with the B, non-cash payments with a value of almost $178 trillion. That's almost 550 million payments per working day. Now, because the current system works pretty darn well, most people spend little time thinking about it, but those of us that work in the payments business know that there are significant opportunities to improve the payment system. There have been accomplishments over the past couple of years. There are improvements underway as we speak, and others are on the drawing board. And I think it's safe to say that there's a tremendous amount of innovation occurring in the payment system. But in our country, it's difficult to innovate and achieve widespread adoption because our payment system is very complex. We have hundreds of millions of individuals and businesses using the payment system every day. We have hundreds, thousands, quite frankly, of banks and hundreds of non-bank service providers all engaged in some part of the payment system. And this complexity makes coordination and broad adoption of new and improved services challenging, difficult, and rather slow. And so one of the roles the Fed plays is what we call leader catalyst in the payment system to work with all payment stakeholders as a neutral party. We're not involved to make a profit, and to seek agreements, compromises, collaboration, so that this massive system of all these parties can work together and move the payment system forward. So on slide 3, we wanted today to highlight for you the result of, or the highlights of the paper we just released, the Next Steps paper. And really that paper was designed to do 3 things. Summarize the progress over the 2.5 years since we started this payments improvement effort in January 2015. We wanted to outline what we plan to do over the next few years to continue these improvement efforts, and then also continue our call to work with all payment stakeholders and for all stakeholders to get involved to help move the process along. So with that as introduction, I'm going to turn it over to my colleague Connie Thine to discuss the more detailed progress that has occurred and the Fed's next steps. Connie?
Great. Thank you, Dave, and good morning, everyone. Thanks for joining us today. I'm going to talk about our next steps in the context of the 5 desired outcomes that we outlined in our strategies for improving the U.S. payment system paper. Those have really remained sort of the guiding light for these efforts. They're ambitious and certainly long-term goals that were established really to reflect the feedback and the thinking of the industry as well as the Federal Reserve. So those continue to be the framework for our efforts, and I'll speak to our Federal Reserve next steps relative to each of those. So beginning on slide 4, you'll recall speed is one of the 5 desired outcomes, and as a reminder, that desired outcome focuses on achieving safe, ubiquitous, faster payment capabilities for the U.S. and that would support a broad array of consumer and business payments. And it acknowledges and seeks a settlement infrastructure that supports that kind of real-time environment and allows, settlement of positions with speed and finality, so that moving forward in this new world, we're appropriately managing the level of risk in the system with settlement capabilities that are needed. Moving to slide 5, Dave mentioned that part of our process in thinking about next steps was to assess progress, challenges, successes, opportunities moving forward. And there certainly, no doubt, has been a tremendous amount of momentum and progress toward that faster payments desired outcome in the last couple of years. You really can think about it on 2 fronts. First, when you think about market activity, really incredible progress here, lots of services with real-time attributes coming to market. You think about and can't avoid the headlines every week about progress and service-related things happening with organizations like EWS with their Zelle service being implemented by lots of banks. Just this week, big announcements coming out of the Clearinghouse about their real-time payment service. And then you've got services and partnerships from card networks and the fintech folks who have been providing services to consumers with real-time attributes, perhaps not the back-end real-time rail, but real-time attributes. And so there's just been a tremendous amount of innovation and activity in the market the last couple of years in this space. We also then think about our Federal Reserve initiatives, and specifically the Faster Payments Task Force, which spent 2 years thinking about how can the industry be successful in implementing faster payments capabilities. And they released, if you haven't seen it, their final report July 21st of this year, and laid out a roadmap for actions that they believe the industry needs to take, as well as a goal to have ubiquitous receipt of faster payments in the U.S. by 2020. Those 10 recommendations can be characterized really in 3 categories. There is a governance and rules focus to their recommendations, an infrastructure focus with 3 recommendations related to infrastructure, and then a sustainability and evolution focus where they talk about what are some of the key priorities that as an industry we need to think about for the long run success of faster payments. So that was really tremendous work done by 320 organizations on that task force, and they did an incredible job of really laying out a very concrete and specific roadmap to guide industry efforts moving forward. Across both of those things, I think we've been pleased to see and consider it a huge success, the level of industry enthusiasm and stakeholder collaboration and desire to work together to proactively address some of these ecosystem needs and issues. I think in both cases as well, there's really a lot of consensus around interoperability, being key to ubiquity and accessibility, that broad adoption and that broad accessibility. And that really, most of their recommendations focus on what they believe to be the building blocks for achieving ubiquity and accessibility through interoperability. So really, a lot of momentum again, and we were excited to look in the rearview mirror and see how much has happened in the last couple of years. So those observations informed our next steps, including those recommendations by the task force, a number of which called for Federal Reserve action. And if we move to slide 6, you'll see the key areas of focus for our efforts moving forward. First, the task force outlined really areas where there is a need for industry collaboration, and in a number of those, they asked the Federal Reserve to continue to play that convener and facilitator role that we played in relation to the task force moving forward. The really first priority of the task force was to initiate a collaborative effort to design the faster payments governance framework. They actually felt it was so important they wanted to ensure that it got off quickly after the close of the task force, and so they actually elected from their membership a group to carry that work forward and asked the Federal Reserve to chair and facilitate that effort, which we are doing as part of our next steps. Those 27 industry leaders who've dubbed themselves the Governance Framework Formation Team are hard at work, kicked off their work immediately. Are hard at work. We actually just had our second in-person meeting with that group this week, and they are looking to produce a draft framework for industry comment by this spring with the goal of establishing a governance framework by the end of 2018. And as I said, Sean Rodriguez, our faster payment strategy leader, is chairing that group, and the Federal Reserve is facilitating it. In addition to that, there were 3 other collaborative efforts that the task force asked to be initiated in advance of the governance framework being established, and asked for Federal Reserve support, and we will be facilitating work efforts to do foundational work on rules and standards, directory models, and regulatory assessments. The directory effort, as a matter of fact, is just getting started with a charter in draft and recruiting underway, and so we expect to kick that off before year end. The other 2 groups will be kicked off successively in early to mid 2018. The task force also asked that we look at 2 operational related kind of roles. One, they asked us to, consistent with our strategies paper, to look at how to evolve the settlement infrastructure to meet the needs of a real-time environment, and specifically to look at a 24/7, 365 settlement infrastructure. And so we have kicked off a work effort internally to look at what the needs might be in the future and what kinds of settlement capabilities might be required. That work effort we expect to conclude that initial assessment anyway by third quarter of next year is the target at this point. We will be soliciting, input to help us understand what the needs are and where some of these private sector solutions might be going and what the settlement needs might be in relation to those. Last, the task force asked us to explore and assess the need for Federal Reserve involvement in an operational way beyond settlement services. And so we also are initiating an assessment to look at that and whether there will be a need to support the private sector in achieving ubiquity of faster payment capabilities. And we'll be looking at a range of alternatives there that might include modest enhancements to existing services. It might include participating in some way, shape, or form in creating the network needed to reach banks, participating potentially in directory models, all the way to the whether or not there would be a need for the Federal Reserve to actually act as a clearing operator in a faster payment system. As I said, we're just kicking off by year end that assessment and also looking to move really aggressively to complete that in consideration of this 2020 goal, and so hoping again by mid to late next year to complete that assessment and be in a position to communicate our intentions to the industry. All right, so that is faster payments and where the Federal Reserve is going in relation to that desired outcome. Let's move to slide 7 and talk about security. Our desired outcome for security is, I talk about these being ambitious, and this is sort of one of those goals that eternal might be the wrong word, but it certainly expresses a desire that we need to remain vigilant as an industry to preserve the strong security and confidence that we've had in our payment systems, and especially acknowledges the fact that that's ever more challenging given the dynamic threat environment. So as an industry, we have to work together to become as nimble as possible in responding to those rapidly evolving threats. So really critical, and I think aligns with, probably all of your organizations thinking on security and how important it is and how challenging it is in our environment today. So again, in assessing, slide 8 speaks to our assessment of progress, challenges, and opportunities related to security. And again, when we think about our Federal Reserve initiatives and specifically the Secure Payments Task Force, we've been thrilled with the level of commitment and enthusiasm shown by the industry. We've got over 200 organizations on the Secure Payments Task Force today, and that number has been growing consistently and steadily since we established it 2 years ago. And those folks are really tackling some tough issues and contributing an incredible amount of time and resource. Many of those 200 organizations have as many as 2, 3, 4 people contributing to different work streams. So an incredible demonstration of commitment to this important priority. One of the things we've experienced and heard from task force participants and the industry over the last couple of years as we've done this work is there's almost an overwhelming number of opportunities and initiatives. And so it feels a little bit like battling on so many fronts. And you'll see that we've done a lot of thinking about that when I speak to our next steps. But it's been challenging even within the task force to think about where do we focus for the greatest return. So that is a challenge, I think, that exists broadly in the industry. There's lots of discussion about how challenging it is to address participant understanding of security challenges, best practices. You think about that all the way from fairly sophisticated organizations that are broad and far-reaching all the way down to, the consumer and small business level. Also, a lot of acknowledgement as the work's been underway of incentives, and are there the right incentives in place across the whole payments chain to drive the kinds of security behaviors and improvements that we would like to see. And last, I acknowledged it previously, but if we thought way back when we published the SIPS paper, on the heels of sort of the new era of data breaches, that was sort of going to be the landscape moving forward. The last 2 years have proven that it's ever-changing and there are always new and different challenges coming to the fore. Breaches certainly continuing, but you've got account takeover challenges, and you've seen very big headline incidents like Bangladesh that have kept the task force processing and thinking, are the things we're working on still relevant and core to addressing these emerging challenges and threats? So with that as kind of the landscape and our experience, from the last 2 years, we really focused on a couple of those challenges in designing our next steps. Slide 9, if we move to slide 9, you'll see that we do think fundamentally that collaboration of stakeholders is core to addressing some of these challenges. You've really got to align some of these initiatives, throughout the entire payments chain in order to affect change. And so we think, continuing to support the Secure Payments Task Force work that's underway is important. They are focusing on really some foundational issues that are relevant to and will contribute to improvements across a lot of different types of fraud and security challenges. Those issues include identity management, strengthening those practices across the industry, data protection, really a core building block, and then information sharing. And that really, I think, is the building block that supports this ability for the industry to be more nimble, react, and manage these threats more effectively. So we will continue to have a number of things underway, and I'll use this opportunity to give you a special preview that tomorrow we are intending to launch SecurePaymentsTaskForce.org, a site that will be used to feature the work of the task force and the tools and information and education that they're planning to deliver to the industry. So mark your calendar and take a look at that tomorrow. Aside from continuing that collaboration, which we think is key, we really felt it was important to address this challenge of focus and try to help, inform industry efforts and priorities with better data. And so we intend to undertake a study that will help to analyze and prioritize payment security vulnerabilities. And specifically, we'll be looking at, what are the key payment security vulnerabilities that are driving fraud, in terms of cost and prevalence. We'll look at the potential for, various approaches to help mitigate those. And then also importantly, look at where there might be incentive misalignment related to addressing those challenges. So that study, we're hopeful, can sort of bring some data to industry efforts and help us collectively to focus on the at least initial priorities and where we might get the greatest return for investing in particular issues and challenges. That too is a 2018 priority, and we're designing that study and securing some vendor support for that, and expect to be communicating progress on that in the first half of 2018. So keep an eye out on that. As part of that, we certainly too expect that we will be, partnering with and collaborating with, folks in the industry to get the data and the insights we need to inform that assessment. Last, I'll say we will continue. You're likely aware of, a number of collaborative efforts that we engage in today in the standard space with X9, some of the efforts there that are really important, looking at these standards related to card-not-present security, those types of things. And we continue to enhance and look at our own services and how can we enhance our value-added suite of risk management services to support, ACH, check, wire payments activities. So you can expect us to continue to partner with our customers, understand your needs, and try and deliver services that support your risk management efforts. So those are our next steps on security. Let's talk about efficiency on slide 10. Our desired outcome related to efficiency is, in its simplest form, about electronification of payments. And, today Dave talked about the 144 billion annual non-cash payments. 18 billion of those continue to be originated as paper checks, which in the scheme of things, perhaps certainly we're going in the right direction, but the decline in the use of paper checks, the decline has slowed quite a lot, and so we're kind of looking at a pretty tough kind of last mile, and it's probably no surprise to most of you that those are largely business checks. And that is where let's move to slide 11 and talk about progress, challenges, and opportunities, because in the business space is really where the challenges to electronification persist. And it's about the fact that for a business, the payments process is about more than just moving the money. It encompasses that end-to-end, and until you can design the end-to-end process to be straight through and electronic, there isn't the value proposition to convert just the payment. So, that efforts to look at the full process, including invoicing, payment, remittance, are really the key to kind of unlocking and achieving this desired outcome. On the plus side, when we think about progress, again, there's been some really important work done in terms of building blocks for moving the ball forward here. Specifically, you've got to have systems that speak the same language to achieve that straight-through end-to-end electronification. And ISO 20022 has really become, there's a huge amount of momentum globally around building our payment systems around that message format, that standard. And here in the U.S., that was a key area of focus in our strategies paper to support this desired outcome, and we've made incredible progress. On the wire front, wire transfers, we just released in October a detailed implementation plan for transitioning wire transfers in the U.S. to the ISO 20022 standard. That will begin with some changes to the current format in 2020 that will begin to align us for taking the next step. And between 2022 and 2023, we'll have the actual transition in a phased approach to ISO 20022. So a very clear plan now, and it's over the next couple of years, it will be all about lining all of the participants up to support that schedule and strategy. On the ACH front, a lot of education, especially in partnership with NACHA over the last couple of years about how to integrate ISO 20022 into the ACH format. There already are capabilities that support businesses transmitting addenda information and such in alignment with that standard. So education continues there, as well as thinking and planning about how the message format can evolve to even more broadly support the standard. And last, a lot of focus here on vendors and engaging vendors, again, who support businesses, who are key to enabling that end-to-end processes. And a lot of work has gone on and will continue to not only educate vendors, but support them with tools for them to engage their end users in this in this kind of migration. Here again, too, I would just acknowledge the incredible amount of industry collaboration. If you're familiar with the Business Payments Coalition, that is a group that the Fed has long partnered with and supported, and today they have more than 550 members who are engaging to work on these challenges and opportunities specifically related to business payments. The last thing I'll mention here, too, is as we thought about progress, challenges, opportunities, we think there's a big opportunity and the potential for some of these new payment systems coming to the market, some of these faster payments capabilities, to really help address some of these barriers. A lot of these new systems are being designed from the ground up. The FASTER Task Force produced the effectiveness criteria, which really help to highlight some of those criteria related to these capabilities, allowing for data-rich transmissions and payments. And so we're really hopeful that that will be a piece of solving this puzzle. So with that in mind, let's move to slide 12. And I'll talk about our next steps related to the efficiency desired outcome. And really, I would characterize these as putting a sharper point on the efforts that have been underway for quite a long time. And first, I talked about this key barrier for business adoption of electronic payments. And that's this willingness of their trading partner to send or receive electronic invoicing information and payments. And so a very big area of focus moving forward will be a 3-year initiative to catalog existing e-invoicing standards and design an interoperability framework for the U.S. market. So getting vendors lined up, getting systems to really support that end-to-end process and e-invoicing in particular. That, again, is a partnership with the Business Payments Coalition. In addition, and very complementary to that work, we're helping to coordinate with a number of standards organizations on an open library of standards for XML business documents. So again, supporting that. What other data, information do businesses need to move with payments, and do they need to be able to reference in the process to support payment transactions? And how can we develop standards to ensure that that is seamless and can be supported through the payment chain? So that will be really a key area of focus moving forward. And we also intend to continue to, explore what are the barriers for B2B payments. What are the drivers for continued use of checks in this space, given that we have come quite a ways with tools and electronic payment options. So we want to continue to stay fresh and current on the issues and barriers that exist, so we can ensure we have strategies and plans in place that really address what's going on in the market today. All right, that is efficiency. Let's talk about international. The desired outcome for international, really, in the international space, we've seen and observed the opportunities and challenges related to seed security efficiency, but unique and perhaps magnified when you think about international payments. And so our desired outcome outlines a vision where there are better choices for consumers and businesses to both send and receive international payments, that they're more convenient, cost-effective, timely, transparent, all of those things. On slide 14, we outline the fact that, there really this is another space where there's a tremendous amount of activity, and we have seen real progress. When you think about market activity, a lot of bank efforts in this space the last couple of years. You think about the SWIFT GPI initiative, partnerships with Ripple to explore opportunities for better cross-border. You look at a lot of fintech companies coming into this space, big ones like PayPal, smaller ones, like TransferWise. So a lot of positive market activity in this direction. That said, we continue to hear about the challenges posed by compliance concerns. And we also are not certain yet that all of that activity, some of it is still in the developmental phase, is quite yet trickling down to really substantive enhancements for consumers and businesses. It's not something you transform overnight, and so we think it's moving in the right direction, but perhaps not quite yet where we'd like it to be for consumers and for the consumer and business experience. I will say standards is, this is another area where a lot of commitment and activity related to standards. We see that both in, as many countries and markets are implementing real-time payments, a very active international group looking at real-time standards for real-time payment systems, so that as all of these new infrastructures and systems come to market, can we lay the foundation for the future for better cross-border interoperability? So that's promising. You also see I talked about our effort to implement ISO 20022 in the U.S. you have virtually all of the major markets across the globe on a path to ISO 20022, and most of them, really in roughly that same time frame I just described. So even for our existing systems, I think those building blocks of common standards will be a piece of improving our international payment experiences. So let me talk about on slide 15 how we intend to engage in these efforts moving forward. One of the things that we would like to do, because we see a lot of activity and a lot of progress and focus on this in the market, we're intending over the next couple of years to engage more with stakeholders to understand better current state challenges and opportunities. Given the level of investment and focus and effort here, where are they making progress and where are they running into challenges? And to what extent could the Federal Reserve be helpful in addressing those challenges? So we'll have really a lot of engagement and dialogue with stakeholders in this space over the next year or so to try and understand where can the Federal Reserve provide a greater level of support beyond, our current efforts to collaborate on standards and some of these issues to enhance our services to support some of these initiatives. So again, research and outreach and engagement to help facilitate progress, as well as ongoing collaboration in some of the industry efforts I just described. And that is a good segue to slide 16, which speaks to our focus on collaboration as really the key to successful improvement of the payment system. You know, and hopefully you have observed that we feel that, payments improvements and enhancements really are best collectively identified and advanced and embraced. And that's been the driver of our approach to establishing task forces, the driver of our approach to engaging in industry standard setting bodies and those types of activities. I think we feel good about the fact that we have seen some material progress as a result of these strategies, and we intend for this to be a focus of our approach and efforts moving forward. On slide 17, I'll just touch very briefly on, a couple of sort of challenges and opportunities. I noted the 320-person Faster Payments Task Force, the 200-person Secure Payments Task Force, 550 people on the Business Payments Coalition, lots of more smaller and more targeted collaborative efforts happening. It's clear that there is commitment to this, an incredible desire to collaborate, and a willingness to commit resources to these efforts. So, that's, I think we would extend our gratitude and appreciation to industry stakeholders for the support demonstrated over the last couple of years. I think we have, seen a bit of, kind of back to my comment about boil the ocean, those 1,000, participants in those three groups I just mentioned, lots of overlap, right? We need all of the key players. We need representatives from, different industry stakeholder segments to participate. And so many hundreds of organizations are participating in all of those efforts. And so, we have certainly, and even at the Fed, had lots of discussion with folks about resources are always a challenge, for any business, for any of us in this space. And so we continue to try and focus on and be creative about how can we advance this work, being sensitive of that and being efficient and effective in our approaches. And we are evolving some of our approaches, as you'll hear when I speak to our next steps. But beyond that, we've had positive feedback. I think in terms of progress, one of the strongest messages we've heard is how valuable it's been to bring diverse stakeholder perspectives to the table to wrestle with these problems and opportunities. And so bringing folks who can represent the viewpoints of our consumer end users, bringing merchants and businesses, fintech companies, banks of all sizes, credit unions, operators, that diversity has been incredibly valuable and contributed to better outcomes. And so, again, that, too, is something that we will continue to consider sort of a guiding principle in how we engage on these efforts. Moving to slide 18 and closing out so that we can allow time for your questions. As I said, we are evolving our engagement strategies, and part of that is thinking about how some of these next steps initiatives really are very targeted efforts that require specific expertise, really require the participation of key enablers and influencers relative to a particular initiative. And so you'll see, like with the governance framework formation team of 27 people, with some of these work groups, a work group on regulatory assessment, that there'll be smaller, more targeted working groups that bring the right expertise to the table. But we don't want to, as we advance some of those initiatives with that kind of model, lose the broad participation and perspectives and input. And so our strategy moving forward will be to leverage our Fed Payments Improvement community, which has over 4,000 members, as an audience both to draw from for seeding some of these work efforts, but also as a sounding board. Our intent is to engage that community much more actively, to provide input, to inform them of progress, keep them up to date, ensure that we're bringing the whole industry along, even where some of the work is being advanced by a small subset of industry participants. So if you have not yet signed up for the Fed Payments Improvement community, I really urge you to do so that you, one, are aware of opportunities to participate as they come up, but you can also track and provide input as a community member where you're interested. We also now have the benefit of having some of the output from a number of these efforts, and so we'll be focusing more effort on educating, driving awareness of what's being produced, the industry direction and decision, to ensure that there's support and these things get implemented and adopted. So we'll be doing much broader and more active education campaigns to support progress on these initiatives. So that is really, moving to slide 19, this just reiterates my, call to action to sign up for the community. But you can see these are all of the channels and ways in which you can engage with us and these industry groups. So I encourage you to sign up. I will say specifically as it relates to faster payments, you'll see there's fasterpaymentstaskforce.org. I talked about the fact that we're launching securepaymentstaskforce.org. Those sites are places where you can specifically say, for example, with faster payments, I'm interested in ongoing work on directories or regulatory assessment or standards, any of those things, so we have an even better understanding of where and when you want to be engaged. So please take action. I'm guessing by virtue of the fact that you're on this call today, many of you might already be part of the community. You're obviously interested in engaging, but if you haven't done so, please subscribe. And with that, I am going to, Jean, turn it back to you so we can get to our questions.
All right, thank you so much, Connie. And just a quick reminder to our participants, if you have a question for Connie or Dave today, just use that Ask Question button in the webinar, and we will get those submitted to our presenters. So our first question is for Dave. Dave, how do we balance the need for faster and more ubiquitous payments with security, especially in light of some of the recent data breaches?
Yeah, that's a great question, and clearly we don't want faster payments that results in faster fraud. So shortly after we established the Faster Payment Task Force, and I think it was about April or May of 2015, we established the Secure Payments Task Force a couple months later, and we gave that task force its first job of working with the Faster Task Force to figure out not only how to make payments faster, but how to make them secure and faster. And I don't know how much you all have read the Faster Payments Task Force's work, but they developed 32, 34, 36 faster payments effectiveness criteria that really would be the ideal kind of system for our country. One category of those criteria related to safety and security, and there are 11 specific criteria that were developed that the hope was that all faster payment systems would meet these 11 criteria as they were developed. So, certainly that was job one. I would say there are other efforts underway on the payment security front. The Secure Task Force for the past couple of years has been focusing on 4 areas: payment identity management, data protection, information sharing related to payment risk and fraud, and then law and regulatory coordination. So that's been another big effort. And then finally, as Connie mentioned in our next steps work, we, the Fed, will be pursuing a study to look at payment security vulnerabilities and try to get to the root causes of those vulnerabilities, and then have us, allow us to think about what next steps we might tee up with the payments industry. So a lot of activity has occurred on this. A lot of activity will occur on this, and as indicated by the questioner, really we need to think about faster and more secure really in the same breath, and not just focused on the faster piece.
Okay, thank you for that, Dave. Our next question is also for you. In a multi-solution outcome, interoperability is critical for providing a fair, competitive environment for faster payment solutions providers. Do you envision that regulators will address this issue?
Yeah, so we agree, and the Faster Task Force agrees that interoperability is crucial for the development of faster payments in this country. Of those effectiveness criteria that I mentioned, there are several that relate to how to ensure interoperability. Also, this group that Connie mentioned that has been set up, this governance framework formation team that has been set up to develop a permanent governance framework for faster payments. One of the key issues they're working on is how to ensure interoperability through the establishment of rules and standards and such, to kind of lay that groundwork. I would say, and this is a Dave personal opinion here, if that governance framework work is not successful in laying, the appropriate groundwork for interoperability, then I would suspect, and I'm not a regulator, I work on the payment side of the Fed, I would suspect, though, that if the groundwork is not laid for interoperability, then the regulators would probably take a keen interest in that. And I would also say on the payment side of the Fed, and I'll get to this a little bit later, but if we see that there is not sufficient access or ubiquity or competition, then those are some of the criteria that we use to think about getting into the business as a service provider. So, we're hoping that we don't have to get into those areas in terms of being a regulator to deal with this issue, but interoperability is very important.
All right, thank you for that, Dave. Our next question is for Connie. Connie, we've seen other countries use the more standard approach of having a central bank develop new, faster payment rails. What lessons have we learned from these other countries?
Thanks, Jean. We've actually, learned a lot from, both the Federal Reserve back when we did a faster payments assessment in 2014, as well as the Faster Payments Task Force who looked at, other markets to gain insights and learnings. And regardless of whether it was a mandate or a centralized approach, I think, we took away some very common themes and learnings when looking at the experience of other markets. One, I think, really consistently we saw, and we're even seeing, I think, now in the U.S., that in terms of rolling out these capabilities, P2P payments were usually prioritized as that, clear consumer demand for real-time, transfers, as well as B2B, where as they were building new systems, this opportunity to integrate, a real-time payment with richer remittance data kind of opened up a value proposition for B2B payments. Across the board, I think I would characterize it as it wasn't about, while the rail and the infrastructure was critical, adoption and innovation really happened on top of that. So adoption didn't really pick up until, the private sector kind of built those value-added services and, effective and convenient delivery channels on top of it. And that, and that opportunity also, I think, was a driver in terms of value proposition for the providers to get engaged and adopt the new service. Across the board, too, I think one of the themes as we've talked to folks in other countries is whether it started as a mandate or not, the potential was really opened up through stakeholder engagement. And so involving stakeholders in the design, the ownership, the operation was really a powerful way to gain industry support and key to the ultimate outcome and success. I think we continue to monitor. You have exciting things happening with systems coming up as we speak in Australia, finally, after talking about that for a few years. And Europe is moving extremely fast in implementing real-time systems. So we'll continue to monitor those for lessons to be learned.
Okay, thanks for that, Connie. Our next question is for Dave. Dave, who will be the final arbiter of what faster payment model or models are selected for the United States?
Yeah, so I think really the short answer to that is the marketplace itself. As Connie mentioned, in this country, unlike some other countries, there has not been a top-down government-type mandate to not only implement faster payments, but kind of how you're going to do it. Rather, as is typical in our country with the free market system, we're trying to, like with the faster payment criteria, set criteria that gives people something to build towards and compete with each other, and then let's see how the market evolves from that. So, really there's no entity that's going to decide which of these systems that hopefully spring up over time are going to win or lose. The marketplace will determine that based on the functionality of the system, the security of the system, the ease of use of the system, all those kinds of things.
Okay, thank you, Dave. We're close to the end of our webinar, but I think we can squeeze one or two more questions in. So, Dave, this next question is for you. When will the industry learn more about the Federal Reserve's assessment of its role as a potential operator, and what criteria will the Fed use to make a determination? If the Fed doesn't become an operator, what will its role be in the faster payments arena?
Okay, so the Faster Payments Task Force paper released in July did specifically recommend that the Fed look at whether it should or should not play some role in faster payments operations. And so we are putting a team together as we speak to look at that possibility. It's going to take some time for us to assess all of the issues that we need to assess. We don't get into new businesses lightly here at the Fed. There are some pretty high bar criteria that we follow, such as we have to fully be able to recover the costs over the long term, including private sector costs that would be paid if we were a private sector firm, such as return on capital and taxes and things like that. The service has to yield a clear public benefit, and there are some details of how that's defined. And then the service has to be one where private sector providers alone cannot be expected to provide the service with reasonable effectiveness, scope, and equity. So that's a pretty high bar, and it takes us a while to assess all of those factors, particularly in a rapidly evolving market. But we hope to have something to say to the market by mid-next year. That's aggressive for the Fed, but that's what we're shooting for because we know there are some that want an answer. If we don't become an operator, I would say for that period of time where we're not an operator, or more permanently, if we permanently decide not to be an operator, we would continue to do what we're calling as leader catalyst and trying to get the industry to continue to work together to evolve faster payments, being the neutral party that can help focus on the right issues, convene the right people, maybe nudge for compromises, that kind of thing.
Okay, thanks so much for that, Dave. Just to let our participants know, we're going to just try to squeeze in a couple of more questions. If you have to depart, we understand, but we do certainly hope you can stay and hear just a couple of more answers. The next question is for Connie. Connie, will there be Fed-sponsored efforts that help facilitate greater consumer adoption and implementation of faster, safer, more efficient payment solutions?
Thanks, Jean. I mentioned earlier we've been focusing on business education to try and support electronification of those business payments. I think we'll continue to use tools like the Small Business Toolkit to support education and adoption as faster payments roll out, as some of the payment security initiatives produce, tools and guidance. On the consumer front, one of the recommendations of the Faster Task Force was, this long-term evolution and sustainability focus included education and advocacy. And the vision there is that will be one of the functions of this faster payments governance structure. And I think to the extent that we contribute and participate in partnership with that governance structure, whatever it turns out to be, we would support, that education and advocacy work stream as we could. So yes, education is important, and it is something that we look to partner with, providers who have the direct relationship with consumers, and with businesses and trade associations and organizations who really focus on education.
Okay, thanks for that, Connie. We're going to do one last question and then we'll close out. Connie, how might faster payments affect wire payments? And is there potential for faster payments to impact the FedWire Fund service migration to ISO 20022?
Thanks, Jean. I'll answer the last question first. No, there won't be any effect in terms of on our implementation of ISO 20022. We are committed to that. We have a clear roadmap, and that will proceed. In terms of how faster payments affects wire transfer payments, I think it's hard to predict. And frankly, it really depends on how providers and financial institutions and others roll out and position those faster payment services relative to wire transfers. So I think there will be a lot of variability by organization, by faster payment service that an organization implements, and the attributes and pricing and features that are part of those packages.
Okay, thank you so much for that, Connie. Given the recent data breaches that have been in the news, will the Federal Reserve take a more active role in educating stakeholders on the costs and benefits of additional security?
Thanks, Jean, and thanks for the question. It's a great question, and I would say that is really largely the focus of the study that I described. Our intent is to more specifically, share data on what are some of the key critical vulnerabilities that we observe in the payment system. How might we, as an industry, address some of those, and what are the costs and benefits? To really focus industry resources and momentum where we're going to get the biggest bang for our buck. And so that's the focus of the study. I'll also kind of refer back to the collaboration efforts that I discussed. And there, too, our focus is going to be on broad education. So the Secure Payments Task Force is developing some really great tools to educate stakeholders on best practices and approaches and controls that can be implemented to enhance their security. And we will be working with the task force, again, to conduct broad educational programs to help people understand and take action to improve the security of their own organization, but also broadly the payment system.
Okay, thanks for that, Connie. Our next question is for Dave. Dave, could you see a scenario in which a government mandate or a national system run by a single operator is necessary?
So in this country, I really can't envision a government mandate in terms of faster payment operations. I think we have a long history of letting things bubble up from the private sector and not have a top-down entity direct, how the system is going to evolve. With that said, and I mentioned earlier in my opening comments, the Fed will play this leader catalyst role to help support the evolution of faster payments and of the payment system more broadly, but we certainly, won't and don't really have the authority to direct or signal that this is the way we want it to evolve. Our role is to support and provide assistance. In terms of the second part of that question, in terms of single operator, I think that's one outcome in terms of faster payments in this country. If I were betting, I would say a more likely scenario is a multiple operator outcome, where you have interoperability and therefore you have ubiquity across the country and across all payment stakeholders. But we'll let the market determine where that heads. But I don't think maybe more to the questioner's point, I don't see that a single operator is necessary to have effective faster payments in this country, as long as multiple operators can operate together and send information back and forth for their respective customers.
Okay, thank you for that, Dave. Our next question is for Connie. What is the path forward now that the Faster Payments Task Force has released its final report? How will you help ensure that the momentum from the release of the report doesn't slow down and risk missing the 2020 timeframe? And is the 2020 goal set out by the Faster Payments Task Force realistic?
Thanks, Jean. And I'll start with the last question first. Is the 2020 goal realistic? So I think back to, Check 21 and how quickly we had 1 year from the time the law was passed to be prepared to implement. And it was really just within a few years of implementation, we virtually had adoption by every bank and that ubiquitous receipt across the country. So 2020 is aggressive. It's an aggressive goal, and the task force wanted that. They wanted to create a sense of urgency and a call to action for the industry. It isn't as if, though, it's aggressive, but perhaps realistic, because it isn't as if we're starting from zero. I referenced earlier the real-time type services already in market being offered by the card networks. You've got Visa Direct, MasterCard Send, you've got Zelle, you have the Clearinghouse coming to market, you have, Venmo and lots of services that have real-time attributes that perhaps with some of the other services and enhancements and infrastructure coming to market might deliver even more real-time attributes. So we're not starting from zero, which makes, 3 years seem like a window in which you really could achieve ubiquitous receipt. That said, it will take, and the task force is urging, every organization to start planning to make themselves faster payments ready by that time. I will say, in terms of how have we, with the paper, the Faster Task Force final report out, what are we doing to ensure momentum? I talked about that largely in the next steps I described. We immediately, the task force elected their collaboration work group to facilitate design of the governance framework before they completed their work in July, asking us to stand that effort up immediately. And we've done that. That work is underway. We'll be kicking off the directory work group by the end of the year, and then into the first half of next year, both the regulatory framework assessment and the rules and standards foundational work. So we're doing what we can to maintain the momentum and really execute the roadmap that the task force laid out.
Okay, thank you for that, Connie. Our next question is for Dave. Dave, the Fed says it will explore and assess the need, if any, for Federal Reserve engagement as a service provider in addressing gaps in capabilities or barriers to achieving speed as a desired outcome. What criteria will the Fed use to make that determination, and how long will the Fed wait to allow the private sector to bring their solutions to market before deciding whether there are actual gaps or barriers that would trigger the need for Fed services?
A great question. In terms of what criteria we will use, we have had long-standing criteria that we follow anytime we consider entering the market as a service provider. These criteria date back to the Monetary Control Act of 1980, and they were updated again in 1990 and then tweaked in 2008. And in a nutshell, there are really three primary criteria. One is that us entering the market has to yield a clear public benefit, including promoting integrity, effectiveness, or efficiency of the payment system. Secondly, the service that we are entering is one that other providers alone cannot be expected to provide with reasonable effectiveness, scope, and equity. And then third, if we get into a business, we must expect to achieve full cost recovery over the long run. So those are the three high-level criteria. Obviously, as we assess these criteria, we go into great depth for each one of them and have to make a case to our Reserve Bank president and the Board of Governors, and then we always also do a public comment to get public input. So the bar is high, and it should be high. In terms of the second part of the question, how long will the Fed wait to allow the private sector to bring solutions to the table? That actually is something we're going to be studying as part of our initiative to explore and assess, is what are likely potential outcomes in terms of the faster payment market space, what are potential gaps and opportunities
where the Fed could play a role that others may not be able to because of market dynamics. But clearly, I think the intent of the question is to ask, is the Fed going to prematurely jump into something? And these criteria that we've set up are designed in part really to ensure that we don't prematurely jump into the market, if there's opportunities for the private sector to solve for these things.
Okay, thanks for that, Dave. Dave, we have another question for you. What barriers do you anticipate to keeping up with the rapid pace of innovation?
Yeah, so obviously there's a ton of innovation going on. I think for innovation in payments to achieve widespread adoption, this is where I think we go back to collaboration. There are lots of great, unique systems that are operating in the market today. I have like 4 apps on my phone right here I'm looking at where I can send money immediately to those that I know. But none of them are, I would call, ubiquitous. I really have to use all 4 of them together and probably others to have some kind of ubiquity in that particular space. So I think collaboration is a barrier, and I think we can effectively deal with that barrier. I think the second thing, the one thing I've heard most, is the difficulty and the cost of making changes to our current system. It takes a lot of money, a lot of time to move from what we have today to the future, and generating a sufficient ROI on those investments, and that's obviously a big obstacle that has to be overcome as we move to these new payment system improvement opportunities.
Okay, thank you for that, Dave. We have just a couple of more questions, so we hope you can stay with us to answer a few more questions. Connie, the next question is for you. What is your perspective on current faster payment systems in the marketplace, and how do they align with Federal Reserve initiatives?
Thanks, Jean. So in terms of how they align with Federal Reserve initiatives, our efforts the last couple of years, our desired outcome has focused on, spurring the marketplace. And so we are thrilled to see the level of innovation and activity in the marketplace, all of these services that are coming forward. More important perhaps than our perspective on the systems that are coming forward is kind of stakeholder perceptions, and that's really, I think, the value of the FASTER task force effort, in that they develop the criteria that stakeholders can use to assess these for themselves, but then they also applied those criteria to the 16 proposals that went through the task force process. And so that's really a way to give insight as to how do these different approaches weigh up against, this model perhaps that the task force developed of the ideal faster payment system. So again, I would encourage you, if you haven't gone out and looked at the solution proposals and the criteria, to do so. It's really informative and I think can be helpful for organizations as you think about what do you need or want in a solution or a service.
Okay, thanks so much for that, Connie. What opportunities are currently available to those interested in participating in payments improvement initiatives?
Thanks for that question. I've mentioned a couple of times fedpaymentsimprovement.org. If you sign up for the community there, you will be notified of opportunities to participate, whether that is, we're establishing a new group or these industry groups or the Fed are putting out a survey for input or putting out a document for feedback. So signing up for the Fed Payments Improvement Community is the first step, and that will expose you to kind of the broadest set of information about these initiatives. I'll also suggest you go to the fasterpaymentstaskforce.org site where there is a follow opportunity in the form you can fill out there where you can express your interest in specific initiatives related to those task force recommendations. So, for example, if you want to follow or be involved in the regulatory framework assessment, there's an opportunity for you to check the box. And when we get to the point of standing up a work group on that, you'll be notified with kind of the expectations and the plan and the timing and all of that, and given the opportunity to participate. So those are a couple of steps that you can take to get involved.
Okay, thank you for that, Connie. And I appreciate your closing remarks there as well. We are just a few minutes over. So at this time, I'd like to thank you and Dave for your time and expertise, and thank all of our participants for joining us. This concludes our webinar today. Enjoy the rest of your day.